Hello, once again, St. John Baptist Church, Alma Claney, with the weekly stewardship video. And before we begin, always the disclaimer: no advice should be seen as a recommendation, as I am not a licensed financial advisor. And this is for educational purposes only, as I will reference a stock in particular here for education later on in the video. Before I start, I wanted to recognize a sad piece of news that we had. I do these videos normally on Saturday. On Friday night, we were told, we got the news that Chadwick Boseman had passed away at 43 years old, the actor who had played such iconic roles as Jackie Robinson, Thurgood Marshall, James Brown, and maybe his more famous part was a fictitious character, which was Black Panther. But a couple of lessons out of this: he was a proud graduate of a HBCU, and he was a Howard graduate. And one of the things that in hearing about the tribute to him, in that he died of stage 4 colon cancer. So there's a lesson learned there for, especially for African-American men, to get your colon checkup, to do that once, I think it's age 50, but you may want to speak to your doctor. There are certain tests that they can do to screen for it. In his case, I think it was diagnosed in 2016, stage 3 colon cancer, and he battled, up until, last night, Friday, August 28th, where he passed away. But during that time, another lesson besides checking for health screening is that during that time, he was still battling the disease, but he's doing what was his God purpose mission, which he continued to act, to speak out, and also he did a lot of charity work with children. And you can use his videos just as a march down history, and show, if there's kids, or even review yourself, Jackie Robinson, Thurgood Marshall, James Brown. It's interesting that today, Saturday, is the day that I think Major League Baseball had designated as recognition of Jackie Robinson and breaking the color barrier. So Chadwick Boseman, it was a shocker, but there are some lessons learned from his life. As we go on into the specific stewardship principle, I thought of the topic: keeping abreast of facts and taking inventory. Even as we just took inventory of Chadwick's life, we need to be taking inventory from a financial standpoint. Proverbs 27:23 through 27. Be sure you know the condition of your flocks. Give careful attention to your herds. And so in this part of the scripture, none of us are sheep herders, I don't think, or goat herders, but we do have financial assets. We need to know the status of our finances through budgets, spending plans, and also in this particular segment, I'm going to talk about mutual funds. We need to know what a mutual fund is. For those of us who have 401ks, that's probably what's in there, primarily as an investment tool. And we need to know even what's inside of the mutual fund. So the scripture goes on and say, for riches do not endure forever, and a crown is not secure for all generations. When the hay is removed and new growth appears, the grass from the hills is gathered in. The lambs will provide you with clothing, and the goats with the price of a field. You will have plenty of goats, milk to feed your family, and to nourish your female servants. So what this is saying is you get those benefits by knowing the condition of your flock. So knowing the condition of your finances, paying careful attention to your finances. So as I said, I thought there was a great scripture to go into mutual funds. And because that's probably the most common mechanism many of us use to invest, especially if it's 401k. So I found this video on YouTube, which describes what a mutual fund is, and even talks a little bit about 401k. So we can go ahead and listen in on it.
This is the Mutual Fund Factory, where all the world's mutual funds are produced. Fund elves wrap stardust, lemon drops, and a nickel in a unicorn bladder, which is then delivered via dragon sled to brokerage firms, who sell them to customers. The customer buries the mutual fund in their backyard, and after 30 or 40 years, a money tree starts blossoming just in time for retirement.
Babe, that's not remotely true.
I know, but we have to get people excited about mutual funds somehow. They're an important option in saving for retirement, and most people don't even know what they are. Even some people who own them, like in their 401ks.
Wait, 401ks are mutual funds?
No, not exactly. Let's start at the beginning. A mutual fund is kind of like a bowl of investment stew. Thousands or even millions of investors pool their money to buy a variety of investments, primarily stocks, bonds, and currencies, which are blended together and then divided amongst the participants. And just like a restaurant serves a lot of different dishes, mutual funds come in a lot of different flavors.
Some funds focus on a specific sector of the economy, like technology, retail, or agriculture. Others focus on specific areas of the world. Emerging markets refers to developing nations. And some focus on the size of the companies, from large cap to micro cap. And they can get a lot more customized than that. The Pax World Global Women's Equality Fund invests in companies that advance the cause of gender equality. Or, for something completely different, the Vice Fund focuses on tobacco, alcohol, gaming, and weapons companies.
Mutual fund shares are usually inexpensive, and you get the advantage of diversification without having to buy hundreds or thousands of shares yourself. But there are costs. Every mutual fund has an upkeep fee called an annual expense ratio, which ranges from 0.1 to 2% of the value per year. Some funds also charge an extra fee called a load when you buy or sell your shares, usually between 1% and 5.75% of the sales price. You can think of these fees as payment to the chef who whipped up your dinner.
Wait, who are these chefs anyway, and how are they deciding what ingredients to use?
Well, that depends on whether your mutual fund is actively or passively managed. Active funds are managed by a team of analysts and traders. They try to outperform the market by carefully watching economic indicators and picking which investments to hold and which to sell. Kind of like a celebrity chef who's always improvising and changing their recipes based on what's trendy or in season. As you can imagine, the fees on actively managed funds tend to be higher.
Passive fund managers are more like chefs who stick to the cookbook. Their goal is to match benchmarks, not beat them. For example, an S&P 500 index fund tries to mirror the modest but steady growth seen in the index of 500 of the biggest companies. Passive funds are popular among investors who believe it's a losing game to try and beat the market. Because there's less analysis and fewer trades, passive funds are cheaper to own.
Mutual funds are an amazing creation. They allow ordinary people to invest like huge institutions, thousands of holdings, diversification, while being easy to use and letting you express your personal tastes and principles. But where do you start?
If you don't have any mutual fund investments yet, you might begin by opening an investment account with a mutual fund company. Their advisors will help you choose funds that are a good fit for your situation. Investors who want a more modern approach are starting to use robo-advisors to invest in mutual funds. Basically, you answer a few questions online and the service automatically constructs a personalized portfolio of funds for you and handles all the trades and holdings. Plus, their investment minimums are pretty low, sometimes just $100.
And if you're invested in a 401k plan through work, you already own mutual funds. And you're paying fees for an advisor, so don't be afraid to contact them and find out which funds you own and what your options are.
I remember the first time I went to a sushi restaurant. I didn't recognize a lot of the ingredients on the menu and I was a little intimidated. But it didn't take me long to learn what I liked, and I'm so glad I did.
Like sushi, mutual funds may not be for everyone, but everyone should be planning for retirement, and mutual funds are popular with investors of every level for good reason. And that's our 2 cents. Still wondering about mutual funds? Well, there's a lot more to know, so ask us some questions in the comments below.
Okay, so that video came from a YouTube video in a group called 2 Cents, which you can go out to YouTube and just type in 2 Cents, and you can even subscribe. They've got other videos out there about IRAs, all different types of financial subjects are out there. One of the things they also mention is the most common way that we invest is through our 401k if you have a job that offers one, and within there will be mutual funds. oftentimes those 401ks at the job will have a match, that they will match a certain amount of money or percent if you invest. And they also have research centers, which you can often go out and learn more about financial topics, or specifically research the mutual funds that are offered to help you make a better selection. There's another resource that I have mentioned before in previous videos, which is morningstar.com, and this is free, or there is a premium offering, but you can probably get what you need through just a free subscription, which is morningstar.com. And on here, I'm showing a page where I went out and I selected a mutual fund called Morgan Stanley Growth. And there is a mutual fund symbol, which is also like a stop symbol. Like, for instance, Walmart stock symbol is WMT. In this case, the Morgan Stanley Growth Fund, it has a symbol MGHRX. And what I did is I just typed in, you can either type in that mutual fund symbol or the name of the mutual fund and search for it, and it will tell you what is inside of that, what particular companies are represented or being invested in by that mutual fund. And you can get to that by clicking on portfolio and scroll down, and then it'll show you. And here are the companies, the top holdings of this particular mutual fund. And here's Shopify, Amazon, Zoom. So Zoom is going to come up later. I'm going to use it as a teaching point example, but there's Spotify, Uber. So if you like the holdings of this fund, then maybe you'll want to be in that mutual fund. It also allows you to make sure you don't have overlap. In other words, you think you're diverse, then you go look at the different mutual funds and they're investing in the same companies and maybe even close to the same weighting or percentage, as you can see here. So coming up this week, the earnings, and I'm going to use this as a teaching point related back to mutual funds, but I thought it would be a good place in the video to show this week's earnings. And as you can see, they're starting to dry up because we're moving away from earnings, peak earnings season, as we're getting like toward the end of the quarter or getting close into the next quarter. So, but one big one that's reporting is Zoom. And Zoom currently is trading at $299.27 a share. That could be a little rich for someone, but the mutual fund gives you a way of participating, and maybe not, you wouldn't own all, have the same impact of having a share of Zoom or several shares, but it does give you exposure to it. But there's other ways. You may have seen the Charles Schwab commercials on stock slices. Robinhood is offering fractional shares. I don't know if it's in Zoom, but that could be another way you can do it. But mutual funds, you can use that same Morningstar, type in Zoom stock symbol, which is ZM, and it will go to ownership. And then you can look at the different mutual funds and how many percent of shares that they own. And so I had chosen that Morgan Stanley Growth. That's how I came up with that one, so that I could see, hey, here's a way of participating in Zoom if I don't have, enough to have $299.27 a share. I can have a piece of Zoom along with those other companies you saw in the listing at a reduced amount, but still be able to participate and invest. So as we always do, let's take a look at the market. Start with the Standard & Poor's S&P 500. You can see we just continue to go right now, which enjoy the increase in the market. You should be seeing it probably in your 401ks and mutual funds. But also, as always, still want to be cautionary as we now are at highs, all-time highs, historic highs. So still want to be cautionary as always, but enjoy the ride. Tech, the same thing. They have actually been leading us, continues to rise. Zoom is in the tech area, and you can see that we continue to increase and set records, but as always, still want to be precautionary, but enjoy the investment increases. And I want to end with a scripture related back to take inventory. And this is from the Message Bible in Ezra chapter 1, verses 7 and 10 in the Message Bible. And here's the backdrop of this. So the king of Persia was fulfilling the message of God that had been preached by Jeremiah. And so it was telling him to build the temple of God. So he was to go to Jerusalem, build a temple of God. And what they did was they started with an inventory, which I think in my mind is maybe one of the first spending plans, one of the first budgets. It could be an inventory of the wealth that was there. And it goes back again, look inside, take be abreast of the facts, take an inventory. So the verse says, also King Cyrus turned over to them all the vessels and utensils from the temple of God that Nebuchadnezzar had hauled from Jerusalem and put in the temple of his gods. Cyrus, king of Persia, put the treasurer in charge of the transfer. He provided a full inventory for the prince of Judah, including the following. And it lists them: 30 gold dishes, 1,000 silver dishes, 410 duplicate silver bowls. So I equate this to looking inside of the treasury and getting specifically what's that inventory. Just like we were talking about going into your mutual fund and looking at it and seeing if it has, redundancy, if you have several mutual funds, or if there's an area that you want to specifically invest in, say, and we used the example of Zoom. Once again, that's not a recommendation, just for educational purposes only, but it may be a little costly or rich to do individual shares, but you could do it through mutual funds. And of course, go back and if you want to review what is a mutual fund in the video that we found. So have a great rest of the week, and we will see you next week as we continue to share the stewardship videos.